much to get out of the hole that you're in. That's why you're not able to invest as much as you want every month. That's why it's so difficult for you to buy a house, to take the vacation, to go travel, to set yourself up for retirement. You simply don't make enough money. Thankfully, though, some good news is that due to the one big beautiful bill that passed last year, things are going to be a little bit easier for us moving forward. Some of the pressures that we see are starting to ease up a little bit. The main two that everyone was championing was the no tax on overtime and the no tax on tips. So real quick, I do want to actually explain what that means for most people, what that actually looks like, and how you can, use that strategy to move, into the future. If you look at some of the benefits that we're getting, when it comes to no tax on tips, no tax on overtime, some other things like that, it's very interesting. You know, you see that the government has now made things a little bit easier for us. Assuming you qualify, which is going to be basically anybody who makes less than $150,000 in adjusted gross income per year. And that AGI, of course, is not necessarily just how much you earn from your job. This is how much you earn after you have all your deductions taken out of it. That is uh, basically how much is the government going to truly charge you taxes on. But we look at what they say here. We're talking about the qualified tips. How you're going to be able to deduct essentially $25,000 max in tip income that you're getting. This is going to really hit hard for people that have very consistent tip based incomes. These are going to be your bartenders, your servers, people like that make a pretty good amount off of these tips. Again, this doesn't include your regular wages. So, for example, delivery drivers at a pizza place, they may get the reduced salary wage of $2.50 an hour, or $3, however much it is, and then your tips make up the rest of that money. So, just the tip income that you see on your W-2 when you get that in January or February, whenever your employer gives it to you, there there is a box on there that actually shows how much is tip income versus how much is your other earned income. And that tip income that you see in that box is what's going to be able to go out here. The no tax on overtime, that's pretty much going to be a big same thing. This is just for the half amount of the time. It's not the time and a half. It's just the half that you get, but you're able to deduct again a maximum of $12,500 on there. So these things are going to help you get some additional income into your pocket and be able to pay off your debts a little bit easier. With this $150,000, it's not necessarily just for the individual. Um, Excuse me, with this $150,000 limit, it's not just your actual net income. This includes um, any deductions that you have on top of that. So your standard deduction, things like that, that's going to bring down your adjusted gross income, which is where this $150,000 actually comes into play. It's the same with the no tax on overtime. The maximum deduction for that one is going to be $12,500. You're going to be just fine up until that point for most people. However, it's only the additional half, not the entire time. It's the only the half of time and a half that gets taken off. So we do need to keep that in mind as well. Um, and there are a few other things in this bill as well that are going to help out some people. The main thing with the no tax on car loan interest is that it has to be at least finally assembled in the United States. Most people with cars aren't necessarily going to qualify for that because most cars, unfortunately, are assembled in Mexico or some other place and imported in. Um, but we do have those benefits that are on the books. They're going to be here for the next few years, and I would definitely recommend with any of this additional money that you save by doing these things that you can put it towards those debts and your investments and to help you dig yourself out of this hole.
I yes, that is certainly the best thing to do with these deductions. One thing that I also want to point out that a lot of people may not know about certain deductions, but in using no tax on tips as an example here, so 25,000 is the maximum deduction. But if you make 30,000 in tips, you can still deduct 25,000. And now all of a sudden you're only going to get taxed on that extra 5,000. It's as if, before this bill was passed, you only made $5,000 in tips. And, it's a relatively, cut, you know, it's a relatively straightforward principle, but a lot of people, including myself, it got that wrong and a lot of the time with certain deductions. For example, interest deductions. There's certain interest deductions for certain things, and I was unaware that these deductions. So if you make more than even if you pay more in interest than the deduction allows, that's fine. You just use that maximum deduction, and then it's as if you only, paid 5,000 in interest or earned 5,000 in interest rather. Um, and, as far as the no tax on overtime, a lot of people, like we're, talking about, a lot of people are taking on extra shifts. A lot of people are trying really, really hard to get out of the debts that they have. Once again, it's the economy it's the economy that we have, especially us as Gen Z. It's the one that we've inherited, from previous generations. But the no tax on overtime, that's going to be really, really good for people, working overtime, trying to get out of debt, trying to get out of the hole that they're in. Um, and maximum deduction is 12,500, and 25,000 if you're filing jointly, of course. And I think that that's going to be very, very helpful for people. Obviously, it's going to inspire them to push for more, maybe inspire employers to maybe push their employees to work more overtime, in which they would be taxed on, $12,500 less. Uh, and so that really the tax implications behind this bill really, really go into those savings, that we're talking about, those tax strategies, those debt strategies. The third thing I want to touch up on, just real quick, um, that you talked about, the no tax on car loan interest. Not a lot of cars are assembled in the United States. Hopefully, we get better at that. But for the time being, a lot of them, yeah, are assembled in Mexico. A lot of them are, especially foreign cars, they're assembled in Europe, obviously. Um, Japan, Korea, things like that. And then, but some, I believe, Chevy, and Chevy has, 1 or 2 plants here in the United States. Toyota produces the Tacoma here in, the United States. I believe their plant is in Kentucky. Uh, and and so this is going to be very, very helpful for people, I think. We gotta have cars. It's a big world. You gotta drive to and from work. You gotta drive to and from college in our case. You just have to have it, and not a lot of kids are fortunate enough to get, their car paid for. And, uh, and so in that scenario, this is going to be very, very helpful, in terms of taking home more of your hard-earned income.
Oh yeah, you're 100% correct on that. And we just talked about a lot of things with those big three items. But something else that I think a lot of people can look forward to as well is that the tax brackets are actually changing a little bit as well. So not for this tax year, which is tax year 2025, but Next year, when you file your taxes, then your tax brackets are actually going to expand a little bit by an average of about 4%. Each bracket is expanding the amount that qualifies for it. So the lowest bracket, for example, the 10% bracket, previously you paid 10% up to $11,925 of income. Moving forward, it's going to go up to $12,400. And so that's going to happen across the board. Every single bracket is having that 4% increase. But something I want to clarify for a lot of people out there is that our tax system is not a flat thing. If you make, $50,000 at your job, you do not automatically get everything taxed at that 12% rate, which is where that $50,000 is going to fall into. It goes from the beginning, which is that 12,400, that's taxed at 10%. The next $40,000 or approximately is going to be taxed at the higher 12%. If you make more than that, then the additional amount that falls into directly that next tax bracket, which is 22%, um, for tax year 2025, then that's $48,500 up to $103,000 is going to be in that 22%. So only the income that falls within that bracket is taxed at that amount. That's what a lot of people don't quite understand. Thank you for watching this clip from Road to Riches. If you enjoyed the video, please like and subscribe to the channel to be notified when we release new content. Full episodes of the podcast are available every Thursday. See you there.